Imagine a world where your money isn't just working for you, but working for a better future, all guided by the immense power of artificial intelligence. It sounds like science fiction, but this is the reality of finance in 2025. A revolutionary wave is transforming the world of investing. AI-powered ESG investing. Today, we'll be diving deep into how this powerful combination of artificial intelligence and ethical principles is redefining what it means to be a smart money investor. I'm going to show you exactly how this synergy works, how you can ride this wave to potentially earn strong returns, and how your investments can make a real, measurable impact on the world. This isn't just about making money, it's about making money that matters. So, let's break it down. What exactly is this AI plus ESG combination that everyone's starting to talk about? First, ESG. It stands for environmental, social, and governance. In simple terms, it's about investing in companies that are doing good for people and the planet. We're talking about businesses with low carbon footprints, fair labor practices, diverse leadership, and transparent operations. It's a way to align your portfolio with your values. Now, let's bring in the AI. AI investing uses sophisticated algorithms, machine learning, and massive data models to analyze the market and make smarter, faster, and more informed investment decisions than any human could on their own. In 2025, these two powerful worlds are not just meeting, they are merging into a single, formidable force. Here's the magic: AI can now process and analyze enormous, complex sets of ESG data in real time. Think about it: sifting through thousands of pages of corporate sustainability reports, analyzing satellite imagery to track deforestation, monitoring social media sentiment about a company's labor practices, and flagging potential supply chain risks before they hit the headlines. AI does all this in seconds. It identifies companies that are not just ticking the sustainability boxers, but are genuinely integrating these principles into their core business in a way that drives long-term profitability. This is why global institutions, from pension funds to major banks, are pouring billions of dollars into AI-driven ESG funds. The data is becoming undeniable. Data-based sustainability isn't just a feel-good strategy. It's outperforming the market. Okay, but how does the AI actually read all this ESG data? It's not just scanning for keywords. It's a multi-layered process. Step 1 is data collection. The AI pulls information from a vast array of sources: official company reports, government databases, environmental sensors, tracking pollution, news articles, and even social media chatter. It's like having a million research analysts working for you 24/7. Step 2 is weighing priorities. Not all ESG factors are equal for every industry. The AI learns to prioritize what matters most. For an energy company, it might heavily weigh carbon efficiency and investments in renewables. For a tech company, it might focus more on data privacy and employee diversity. This level of nuanced analysis is key. Finally, step 3 is predicting risks and opportunities. By analyzing patterns in the data, the AI can forecast potential problems like a new environmental regulation that could impact a company's costs, or a supply chain disruption due to social unrest long before the broader market reacts. It can also spot hidden opportunities in companies that are quietly becoming leaders in sustainability. That's the true power of AI in this space. It operates without human emotion or bias. It's all about the numbers, optimizing your portfolio for both financial performance and genuine responsibility. This isn't just a futuristic theory. It's happening right now with real companies and real money. Let's look at a couple of real-world examples to make this concrete. Consider Company a renewable energy firm. They're using a sophisticated AI system to optimize their wind turbine operations. The AI analysis weather patterns, energy demand, and maintenance schedules to maximize clean energy output and, consequently, their profits. Investors using AI-driven ESG analysis would have spotted this company's efficiency and growth potential early on. Or Dicky Funds be an ESG investment fund that's fully powered by AI analytics. Instead of relying solely on traditional ESG rating agencies, which can sometimes be slow or subjective, this fund's AI builds its own dynamic ESG scores from the ground up. The result? It has consistently outperformed traditional, human-managed ESG indexes. We're seeing this across the board. Global funds, secretive hedge firms, and the world's biggest banks are all integrating AIST systems into their core decision-making processes every single day. The charts don't lie. When you compare the performance of traditional ESG funds against these new AI-enhanced ESG strategies, the data often points to higher returns and, just as importantly, lower long-term risk. It's a game changer, but only if you know how to navigate it and pick the right models. Of course, with great power comes great responsibility, and no system is perfect. It's crucial to understand the risks involved before you even think about diving in. First and foremost is the data problem. ESG data can be inconsistent, incomplete, or even intentionally misleading. If the AI is fed bad data, it will make bad decisions. Garbage in, garbage out. Another major risk is overfitting. This is a technical term for when an AI model relies too heavily on historical data. It might build a perfect strategy for the past 5 years, but it could be completely blindsided by a sudden, unprecedented market shift like a pandemic or a major geopolitical event. You also need to watch out for the costs. Some funds that slap an AI ESG label on their product charge very high-tech and management fees that can eat into your returns. Do your homework. Finally, and this is a big one, there are ethical blind spots. An algorithm is only as good as the humans who design it. If it isn't programmed with a balanced view, the AI might learn to prioritize certain profitable metrics while ignoring serious social or governance issues. But here's the key. Understanding these risks is your greatest advantage. It allows you to use AI as a powerful tool to supplement your judgment, not as a black box to blindly gamble with. So, you understand the concept, you're aware of the risks, and you're excited about the potential. How can you, as an individual investor, actually get started with AI ESG investing in 2025? It's more accessible than you might think. The first step is to choose an investment platform or brokerage that offers tools for AI and ESG analytics. More and more platforms are integrating these features, providing you with ESG scores and AI-powered insights. Step 2. Start small. You don't need to move your entire portfolio overnight. Allocate a small portion of your capital to test the waters. Learn how the models behave, see how the recommendations perform, and get comfortable with the process. Step 3 is to actively track your investments. Don't just set it and forget it. Regularly check the ESG scores of the companies in your portfolio and monitor their performance against your goals. Step 4. Be ready to adjust. If a company's ESG score suddenly drops because of a scandal or a change in its business practices, be prepared to act on that information. The AI We'll flag it, but you have to make the final call. And that brings us to the most important rule of all. Step 5. Always keep human judgment in the loop. Think of the AI as your incredibly smart, data-driven research assistant, not your boss. It provides the data and the probabilities. You provide the wisdom and the final decision. By following these steps over time, you can build a portfolio that is not just profitable, but also sustainable and truly ready for the future. In the end, this powerful combination of AI and ESG investing is some far-off vision of the future. It's happening right now, and it's gaining momentum every single day. If you want to invest smarter, align your money with your values, and make a tangible impact on the world, the time to start learning is now. Start small, stay curious, and begin building a portfolio that you can be proud of. Now, I'd love to hear from you. Drop a comment below. Would you trust an AI to help manage your money? Let's get a conversation going. And if you found this breakdown helpful, don't forget to hit that like button, subscribe to the channel, and turn on notifications so you won't miss our next deep dive into the future of smart finance. Thanks for watching.